Mitchell is the CEO and CIO of Starlight Capital, and we're pleased to have him here this half hour to talk about the markets and the outlook from here. Dennis, nice to have you with us. Let's start with the inflation picture and what your takeaways were from this latest data.
John, wouldn't it be awesome if we could talk about corporate earnings instead of inflation? That would be fantastic. Look, this was a bit of a mixed bag, but I think you hit the nail on the head in terms of the number one driver was shelter costs. Significant component of shelter costs was, in fact, or mortgage rates going up by 2x over the last sort of 24 months. So I think the Bank of Canada is going to heed Rosenberg and sort of other people who have said, instead of looking backward, look forward. But if you are going to look backward, GDP growth in Q3 was negative 1% in Canada. So we have this weird situation. I think the people who have been calling for stagflation for the last 30 years have finally, been vindicated. We have negative GDP growth. We have above target inflation. That's not a fantastic place to be. The question is, what is the Bank of Canada going to focus on? And I think the Bank of Canada is going to focus on the fact that their rate cuts from last year at this time through to July of last year, 2 years ago at this time, through to July of last year, have yet to impact economic growth. Right? And so we are going to see more and more downward pressure on GDP growth going forward. We have seen a troughing of the unemployment rate in Canada and the US. So we started to see both start to move up. Wage growth, while elevated, has started to come down. So I think if you're looking forward, you can see the economic picture weakening. And I think that is what will drive the Bank of Canada's actions later this year when they start to cut rates.
This gets a bit inside baseball, but there's sort of a parallel conversation in the United States where the market was sort of pointing to similar things that you're highlighting and making these bets that we would see rate cuts, for example, in the U.S. as well as we move through this year. Seems like so far this year, the ups and downs that we see in the stock market are based on people saying, well, will they be as aggressive on cuts as maybe people had thought, or will they be less aggressive? And I would imagine for the central banks, it's hard to ignore at least how the market is positioning around all this. So if you're the Bank of Canada, you're still somewhat worried about inflation today, but they also see the same stats that you're seeing about where we could be going. What kind of message do you ultimately send to the market?
I think the Bank of Canada was worried that the reaction in markets in Q4 of last year kind of resembled like kids, elementary school kids on the last day of school in June, right? Everyone is ripping off their coats, throwing away their books and saying, we're free, right? No more hiking cycle. And so I think the Bank of Canada was worried about sentiment and whether or not we'd see this huge upsurge in investment that would drive inflation up again, this uptick in hiring that would bring unemployment down further and put further upward pressure on wages. So I think that was the concern of the Bank of Canada. But I think, again, as they look forward, there is so much obvious downward pressure on consumer spending, on GDP growth, that I think the Bank of Canada is going to remain on the sidelines. They're going to be data dependent, as we like to say. And I think their next move will be a rate cut later this year. I think people who were forecasting rate cuts as early as March were the people who were leading the charge out of the elementary school on the last day of school in June, right? Lots of exuberance, but that just points to the fact that, that constant grind up in terms of interest rates really had an impact on both consumers and business. And so that palpable, right, is business leaders around North America saying, we made it, right? That was the most aggressive interest rate hiking cycle on record in North America. And for the most part, Canadian business absorbed it and kept chugging along.
I like the June imagery in January, by the way. That is also warming to me. But we're going to take a break and talk a little bit more about how you're approaching investing and your sweet spot of real estate a little bit later this half hour. But what kind of market does this look like for you this year? Maybe we made it through this rate hike cycle, but people still feel a little bit uncertain about where the overall economy lands. Canada and the U.S. are very connected. If things hold up relatively well in the U.S., that should also help Canada, even though we've got so much of that tie to the housing market, which has been troubling some. So how are you thinking about the landscape overall as an investor?
Right. So portfolio managers love to say it's a stock picker's market. So it's a stock picker's market. And my ammunition to support that is this. There are three sources of return: your multiple that you trade at, your yield, and your growth. And if you look at the market as a whole, it is nowhere near pricing in recession, right? You're trading at 20 to 21 times this year's earnings expectation. So there's potential for those multiples to come in a little bit this year if we get good news pushed out or bad news, unexpected bad news. Then if you start looking at growth, well, global earnings are supposed to grow at 6%, the long-term trend, but that's predicated on U.S. earnings growth of over 11%. So I would say there's probably some downside to that going forward. And then yields have normalized in the equity markets back down to 1.5%. So I would say that you're going to need to find those companies that have the ability to grow earnings resiliently, that are not trading at elevated multiples, and that, preferably pay you a decent yield with a track record of growth. Those are the companies you're going to want to pick and choose regardless of industry. So it's a stock picker's market.